AMD reported quarterly financial results after the markets closed on Tuesday, October 29th, that are sending the stock price down by more than 9% on the day following the announcement. So I'll review the company's latest quarterly financial results and highlight the big picture items. And I'll also update my buy recommendation for AMD stock. Coming into this quarterly report, I had AMD stock rated as one of my top stocks to buy in 2024. I've had it rated as a top stock to buy in 2024 all year long. And the stock price is flat year to date. It's trading at $150 per share right now. That's pretty much where it started the year. So despite NVIDIA's accelerated growth, AMD is flat, and that has investors disappointed. So I'll review the numbers and I'll update that recommendation here. I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so AMD management saying that we delivered strong third quarter financial results with record revenue led by higher sales of EPYC and Instinct data center products and robust demand for our Ryzen PC processors. Looking forward, we see significant growth opportunities across our data center, client, and embedded businesses driven by the insatiable demand for more computing power. And that's what investors wanted to hear. That's what AMD has been saying, and that's the categories that AMD has been benefiting from. But the trouble is that AMD is not growing the data center business at near the rates of NVIDIA. And on top of that, AMD's other segments are not performing well. AMD has two segments that are performing well and two segments that are not performing well. And the underperforming segments are weighing down the business's overall growth. Still, the company is growing very nicely, expanding profit margins, expanding cash flow from operations. I think the difficulty it's having is that it's getting compared so much to NVIDIA that it's making the company look worse than it is. But in actuality, as I'm going to share with you here, the results were pretty solid. So in the third quarter, revenue was up 18% year over year to $6.8 billion. And the gross profit margin also increased to 50%, up from 47% in the same quarter last year. Sequentially, those numbers are also up 17% and 1% respectively. If you look at operating income, that was up even more to $724 million, up from $224 million, or 223%. And the operating profit margin more than doubled, almost tripled to 11%, up from 4% in the same quarter last year. So like I mentioned, the company is making good progress. Revenue is expanding, and that's growing its profits and profit margins. But the problem is it's not growing at anywhere near the rate of NVIDIA. And that's what investors are penalizing AMD for. And also the other segments, like I mentioned, the gaming segment especially is not doing well for AMD. All right, talking about the segments, the data center segment, absolutely thriving. And yet another data point here that suggests the investments for artificial intelligence optimized data centers continues to soar. Record data center segment revenue of $3.5 billion for AMD, and that was up 122% year over year and 25% from the previous quarter. And this was driven by its new AMD Instinct GPU shipments and growth in its AMD EPYC CPUs. The company's participating nicely in this data center segment, the explosion of investment in this category. Still, it has a very small market share in this category. Estimates suggest that it's less than 10% market share in this category, whereas NVIDIA is close to 90% market share in this category. But AMD is making nice progress. It's the number 2 player, according to most estimates, in this category, and the category is growing very quickly, as you can see, and AMD is making inroads. NVIDIA does not have enough supply to meet all the demand in this segment, for one, and then for two, the buyers of these products for data centers, they want to diversify. They don't want to go only to NVIDIA for all of their product needs. So AMD is getting an opportunity here, and they are capitalizing on that opportunity, just as I would hope they would. The client segment revenue, which is their personal computer sales, that was up 29% year over year to 1.9 billion, driven by its Zen 5 AMD Ryzen processors. And the PC market is only now starting to recover and rebound from the gap in sales here in 2023 and early 2024. Remember, so many people bought computers in 2020 and 2021, and so they weren't going to buy any in 2022 and early 2023 and all of 2023 actually. But in 2024, those computers that you bought in 2020 are now going to be 4 years old. So if you're using your computers for work, that's now a relatively old computer. Unless you bought a really high-end computer, those 2020 computers are now may not be up to the task. It might be slowing you down in your work. So you need to start upgrading those for business. And then starting in 2025, that's going to be even older. So your replacement cycle is entering one of the biggest replacement cycles in PCs that I think will ever be. That's going to be not just because of those older computers, but Microsoft is ending support for its older generation Windows. And on top of that, these newer PCs are going to be enhanced with artificial intelligence. So that might create incremental demand. So the PC rebound is only getting started. But still, the gaming segment down big, 69% year over year. And that's a result of a decrease in semi-custom revenue. AMD does gaming chips for things like the Sony PlayStation 5, which is now several years old and it's not generating as much sales, and so production is down. And so that segment is struggling. And then the embedded segment, 927 million, was down 25% as there was too much inventory in the system that needed to be digested. And so buyers, the distributors, were not buying as much of its products because they had already inventory on hand. During one of its events, AMD shared new details on its next generation AMD accelerators planned to launch in 2025 and 2026. So AMD, like NVIDIA, wants to have this annual upgrade of its next-gen Instinct accelerators for the data center market. So it looks like it's poised to be that number 2 player in this market and poised to take a little bit more market share. I can see AMD growing up to about 20% market share in this category, taking it away from NVIDIA because, like I mentioned earlier, enterprises do not want to rely completely on NVIDIA, and also NVIDIA doesn't have enough supply to meet all the demand for this category. So looking ahead, the company is forecasting revenue of 22% growth at the midpoint in the fourth quarter, with gross profit margin expanding again to 54%. Again, solid growth, not comparable to NVIDIA, nowhere near comparable to NVIDIA's growth, but excellent growth for itself. And then looking at its cash flow from operations in the most recent quarter and in the most recent 9 months completed September 28th, cash flow from operations in the most recent quarter increased to 628 million, up from 421 million, so roughly 50% increase there. And then for the first 9 months of 2024, cash flow from operations up to 1.742 billion, up from 1.3 billion in the same 9-month period last year, so solid growth in that category. AMD is now trading at a forward price to earnings of 27.95, which I think is a relatively cheap valuation for this company, growing. Look, it's forecasting revenue growth of 22%. Its profits are going to grow faster than that. Its cash flow is going to grow faster than that. And it's just in the middle of that rebound in the other categories of the business, while the data center business is exploding higher. So to update my recommendation, I still think AMD stock is a top 25 stock to buy right now. Of course, I like NVIDIA better than AMD, but AMD is also an excellent choice. Hey everyone, if you like watching my videos, then I've added a great complimentary product just for you. I've created a book, I've written a book that's available for sale now that highlights my 6-step investing framework. Even if you don't follow that investing framework, just reading it and knowing how I evaluate stocks will make it a lot more interesting and informative to watch my videos. I've added the link in the description below.